Hi, I'm Christina Trauthwein, VP of Content and Partnerships at Hotel Business, and I'm here with James Reivitis, and he is the Chief Development Officer at Access Point Financial. Hi.
Thank you for having me.
Sure. So let's start off by talking a little bit about Access Point Financial.
Sure. What people may or may not know us in the industry, Access Point Financial is primarily a bridge lender, but really a full stack capital provider for hotels. So we do everything from bridge, mezzanine, preferred equity, construction loans, and we can do kind of alternative investments. We started as an FF&E lender, but primarily now we operate as just a primary lender.
James, can you speak to your platform growth and expanding offerings?
Sure. So our platform has really grown tremendously over the last year. Obviously, it had some of that has to do with the current market conditions, but we've really expanded into doing kind of larger, more diverse transactions. So we've done a lot more portfolio work, which allowed us to kind of grow our book and really kind of meeting kind of the needs of the industry, where we've kind of moved kind of into the more, upscale and select service spaces where historically we hadn't been, where, the loan sizes are larger, which has allowed our business to grow kind of tremendously over the last 3 years.
Okay, are you primarily select service focused?
We are, I would say, select service focused, but not select service limited. So, this year we are, one of the few firms that gets equally as excited about an $8 to $10 million Hampton Inn loan and that type of capital solution for those types of regional owner operators, multi-unit owners, families, things like that, all the way up to institutional assets. We most recently refinanced a large institutional quality asset in New York for $195 million. So it's really kind of a wide range of outcomes. So, but our primary book is select service focused, and we can kind of follow our clients anywhere.
Okay, great. Are loans a commodity? What are your thoughts?
We kind of joke money is a commodity, so it's money comes with a price. Everybody's money is the same once you get your hands on it. But we think that as a lender, we think, lenders are themselves not commodities, right? So, there's one thing where, a loan and the pricing, but it's who you're in business with. So we care deeply about our clients and who they are. And so from that aspect, we are hotel specific. We do nothing else besides hotels. And so when you call up, there's special needs at hoteliers. It's, what is the brand doing? What is my PIP and my CapEx and my reserves? There's something happening where other lenders that might not be as sensitive or aware of those nuances, we are. So that's why we don't think of it. Everybody is not built equally. And then also really understanding who your lender is and where their capital comes from and kind of what that means for you and kind of what that can mean in the current environment.
Okay, so the current environment, how do bridge lenders fit in today?
Sure.
And is loan to own a real strategy?
I know the question of the year.
Yeah.
So bridge really fits in as if you can't do, you don't have enough cash flow, or for a conduit you don't want to be locked out, or you're in a position where you need to go from one place to another with the asset, right? So it's transitional, and you need somebody to kind of help go along with you when your metrics start in line to get a more traditional lender. And so the real role of a bridge lender and how they fit in is helping owners get to that place, right? And so it's not meant ever to be a permanent solution. And a lot of times they go, I'm going to be paying these rates or whatever forever. Really, that's not what it is. It's about helping you find the solution you need to get you to where you want to be as an owner. So that's really how we think about it. On loan to own, it's something that's pretty commonly thrown around a lot.
Yeah.
And it's really, I think, a misconception. Kind of some of the other, people in this space really talk about it. It's really punitive for us sometimes to kind of take things back, right? We really don't. And what we kind of usually, we view it as pay as agreed. Okay. And then we always want to work with the right solution for the asset and the owner. And, to the extent that there's some bumpiness and we can restructure things like that, but it's really the last resort. A small percentage of our loans are volume. That's mainly because we have a really good dialogue with our owners. And that goes back to your first question, which is, are loans a commodities? It's like,
yeah.
If you're working with the right group, if you have if you stumble and if the market turns or whatever, things can obviously happen. But when you're working with a good lender that knows and there is still a path and you just need to be worked out in the nuances and the niches, that's why it makes a big difference.
Got it. Okay, the term we hear often is distress. So
Sure.
What does that mean, and what is a financeable deal today?
Sure. So distress, I think about distress as distress is typically, associated with leverage, which is a fundamental, pillar of how hotels work. When we think about distress, it's about, the owner or the hotel itself not having kind of the current capital required to meet its capital needs, right? So that means it's distress, right? Because there's not enough cash to either pay bills, pay debt service, pay things down, or, get themselves a new deal. So that's kind of how I think about it, where it isn't this writ large, like all hotels are in distress. You go, well, that's not, it's every deal has a different capital stack. So you need it's really dependent on that and the ownership in the sponsorship group, right? You can have a sponsor that has, very liquid and they might have an asset that's underperforming, but if they have a lot of cash, they view it as it's a troubled asset, but it's not in distress. They're not going to have to go to market, sell. If they've got enough cash to, pay the freight, that's not, I wouldn't consider that a distressed asset. And so what was the second part of your
The second part, what is a financeable deal today?
Sure. So we think about this a lot because there's a lot of opportunities. There's plenty of deals that we can't finance because they have better options or different options. And then we also think about what we can and can't do. And we think a financeable deal is really twofold and two types. I'll take in two days. One is where there's real owner commitment and a real story that makes sense of where the asset needs to go to be refinanced. So, we can then be refinanced out so that, on the asset's journey, it either goes to its next owner, its next bank, it's whatever it is, right? So that's one is a cohesive story. And, we really look for owners that are committed and they're showing us that, right? Where instead of it being like throwing their hands up in the air and being like, I just need somebody to help me figure this out. It's like somebody comes in and it's like they've thought through the hard questions and their sponsors are committed to the asset. And so in terms of that's how I think about what's financeable. It's as much about the sponsorship bringing their story to it and their commitment that helps us understand because, we're then putting in fresh capital to go with them on that stage of the asset.
Okay. Where do you see opportunity this year?
Sure. So when I think about opportunity this year, there's obviously opportunity in the industry writ large and there's opportunities for us.
Right.
I think, since we work with sponsors, right, obviously as a debt capital provider primarily, we can't transact unless there's an equity counterparty that wants to transact with us. So I can't go out and force a deal, right? We have to go through a process. And so when I think about opportunity for us, it's a lot of, the types of owners we're working with are owners that are really sharp on operations where, the RevPAR story writ large is a little weak right now in terms of this tide that lifts all boats. So when I think of opportunity, it's really these owners that are rolling up their sleeves and like doing the hard work to get the margins where they need to be on these assets. And that's a story that we work with a lot, right? An asset has been maybe neglected, underinvested, things like that. And owner wants to come in and, we understand that they're very capable. So I think that this is very much a year of that, of like telling the story of taking an asset that maybe was overlooked or just the people just were busy surviving COVID and a bunch of other reasons. And somebody's ready to take a fresh look at the energy in the asset to get the margins and the index and the PIP and all the rest of the things in line. And then the other thing is just, we still think that there's some niches in spite to do some select service development. So, primarily, obviously everybody, I'm sure you talked to many of your guests, if you talk about extended stay,
yes.
We have many of those in our portfolio, especially, on the economy end, we think those are certainly financeable assets. But, they're not necessarily financeable, at terms people would like. It's just they're financeable, they're financeable if you've got the equity and the vision and the market is fair, right? So yeah, we're certainly in the right now, we are on, put capital out into the right deals. It's just every kind of transaction is kind of different. Every sponsor is different.
Of course. Thank you so much for your time today, James.
Thank you so much. This was lovely.
It.
Thank you.